Moby Trades! I wanted to do a video analysis update on the S&P 500, the NASDAQ, as well as Microsoft, Apple, Google, AMD, and Nvidia, Qualcomm, Micron, and Disney, Boeing, Exxon, Mobil, and Nike, AMC Theaters and Netflix, Salesforce, ROKU, PayPal and iPay, Palantir, Lucid Motors, Unity Software, and the IPO ETF, Tesla, NEO, Xpeng, Bitcoin, Ethereum, and Marathon Patent Group. So we'll start with SPY, 1, 2, 3, 4, 5, wave 1, ABC correction, wave 2, that ended at the 50% retracement. So if SPY is above 448, not too many more important levels to the downside for market bulls. If we're above 448, wave 2 is in. The length of wave 1 placed at the wave 2 low can take SPY to 495. Let's say 500 because that's the 161.8% extension of wave 1. 495 to 500, I believe, is the next stop for wave 3. Aggressively, that'll happen by the March quad witching date. More conservatively, by the June quad, but I really think it's going to happen by the March quad. I think we hold 448, start heading to that big round number of 500. Then I'll be looking for kind of the kid at the bus stop euphoria moment. But anyway, this is an ABC correction for the NASDAQ and a 1, 2, 3, 4, 5 wave 1. Now, it's really important to understand that I think Microsoft shows how if the NASDAQ does break this wave 2 low of 377, it wouldn't be the end of the world. We'd just be looking for wave 2 to end between the 61.8 and 78.6% fib. So the invalidation level right now for the NASDAQ is 362, or at least that's the best stop level right now is 362. I think we hold that level, and I think that the NASDAQ gets pretty explosive. What we see in SPY right now is really much better invalidation levels from the indices. The SPY will hold 448 to even 451 would be a little tighter. I think that's the best, kind of downside level right now for market bulls. But this is a 1, 2, 3, 4, 5 wave 1, and Microsoft kind of shows how even if the NASDAQ breaks below 377, we just be looking for an explosive wave 2 between the 61.8 and 78.6% fib before kind of the blast off moment into the 430s, in line with what some will refer to as a melt up in tech. I think Microsoft really kind of supports that idea. Microsoft really shows how even if the NASDAQ breaks below 377, it be, just kind of delaying the inevitable. This is a 1, 2, 3, 4, 5 wave 1 and an ABC correction wave 2 at the 50 to 61.8% fib. So nothing's ever inevitable in trading, but I think that this is a bear trap for big tech. I think what's really interesting, we had that massive value outperformance this week. I could see a lot of retail traders getting the wrong idea. Oh, I'm going to go chase value right now, and I'm going to go short tech. That's kind of why I like to buy weakness. But anyway, 1, 2, 3, 4, 5, wave 1, ABC correction, wave 2. Microsoft can end this wave 2 at any time and start to fly. The length of wave 1 placed with wave 2 low says Microsoft can go up to 380, I think, by the June quad witching date. And that's even a little conservative in my opinion, but if this is a wave 3 that happens, it's going to be explosive. It's going to be bigger than this wave 1. So I think this is a wave 1 and wave 2. I want to see Microsoft above 295 before the length of wave 1 placed with wave 2 low possibly takes it on a wave 3 up to 380, even possibly beyond 380. So a lot of people really want to pop this tech bubble. I think they're going to just end up inflating it. Here is Apple. Wave 1 and wave 2, another wave 1 and another wave 2 from this low, but the most important count is just within the cycle from the May low that this is a wave 1 and a wave 2. This is a wave 3 that goes past the 161.8% extension. So for a wave 4, I look for the 50% retracement of 160 to not get broken. I look for a little wider, the wave 1 high of 157 to not get broken. That's a very important elite wave principle that wave 4 retests the wave 1 high. So that's going to come into play with AMD in a second. I want to see Apple above 157 to 160. Then I expect the length of wave 1 placed at the wave 4 low takes it on a wave 5 higher up to 200. And really in any count, I think that would be a clear 1, 2, 3, 4, 5 waves. So Apple getting to 200, if we do kind of have, a big rally in tech, that's going to be a very important level, at least for a short-term pause. Here is Google. Pretty cool chart. Wave 1, wave 2, 1, 2, 3, 4, 5, wave 3. Now wave 4, and we're getting close to that wave 4 low, but I don't think it goes. So if Google is above 2,621, at least that's what I memorized, 2,621, perfect. Okay, if we're above that level, then this is a wave 1 and a wave 2. We're going to go on a wave 3 up to 3,265 before a shallow wave 4 and a wave 5 higher. That would imply that Google is going to go past the minimum wave 5 target, which is at least the length of wave 1, placed at the wave 4 low. So Google's at a pretty interesting juncture right now. I want to see 2,621 not get broken. Even if it was, I would just be calling this a wave 3, and I'd still be looking for wave 4 to end. So again, I think Microsoft, very important chart. Apple, very important chart. SPY, very important important chart, and they all kind of support the idea that we shouldn't bet against tech. So I think most likely this is a wave 1 and a wave 2. Wave 3 is going to go up to 3,265 before a shallow wave 4 and a wave 5 higher. Let's talk about some semis. Advanced micro devices is really at an interesting place. This is a wave. Well, we won't talk about the bigger picture. Let's just talk about the smaller picture right now. It's the most important picture. I believe that this is a wave 1 and a wave 2, and this black wave 3 is still in progress. So this is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3 and wave 4 of wave 3 that retests the wave 1 high. So what I want to see is that AMD will hold above 122. Remember what I talked about with Apple? Wave 4 retest the wave 1 high. That's an extremely important, I would even say the most important Elliott wave principle. This is a wave 1 and a wave 2, a huge wave 3 that blows past the 161.8% extension. I think right now we are ending wave 4 at the 50% fib. So if we're above 122 to 124, I don't think wave 5 will be the length of wave 1 placed at the wave 4 low. I believe wave 5 will be the length of wave 3 placed at the wave 4 low. That can take AMD all the way up into the 190s. 195, I think it's hit by the June quad witching date. So within the spring, I could see that Nvidia and AMD have a nice rally. I've been talking about them for a while, so I think the summer would be very, a little more conservative and fair, but, I don't really think that if this wave 5 happens, it's going to be short. I think it's going to be, explosive, right? So this is going to be a wave 1 and a wave 2, kind of similar to AMD. I believe a huge wave 3 is in progress. This is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3 that blows past the 161.8% extension. Now it looks like we're ending a wave 4. So a little tight would be the 61.8% fib of 253. A wider invalidation would be the wave 1 high of 230. I don't think either of those go, but I really don't think the wave 1 high of 230 will go. The length of wave 1 placed at the wave 4 low can take Nvidia on a rally higher up to 385, and the deeper that kind of Nvidia corrects, the more likely that maybe wave 5 won't be the length of wave 1, it'll be the length of wave 3 placed at the wave 4 low. It's going to end up being a very similar result. A wave 5 higher up into the 380s, the 390s. I think this is a wave 1 and a wave 2. I think we hold 230, 253 will be a little tighter than the length of wave 1 placed at the wave 4 low. It's going to take Nvidia on a rally into the spring more conservatively this summer with AMD. And not just those two, but we've seen a little interesting fluctuation in leadership even within sectors, right? All of a sudden the quarter shifts and Micron's doing really well. Intel's doing really well, right? Taiwan Semis is doing really well. And of course they all have their individual reasons, right? But anyway, this is a wave 1 and a wave 2. This is a wave 3 and a wave 4. So we saw institutions were loading up options on Qualcomm right before earnings, right? We didn't have to be, scientists to figure out they were probably playing a move to the upside at the 38.2% fib. That's exactly what ended up happening. Wave 1, wave 2, huge wave 3, and a wave 4 that ended at the 38.2% fib. I believe Qualcomm is halfway to the wave 5 target. The length of wave 3 placed at the wave 4 low says Qualcomm is going to go up to reach my wave 5 target of 232, and it won't do that alone. So what we've been looking for, Qualcomm broke that high. It looks like Micron's next. And what happened? Micron was next. Another interesting tidbit about Micron. I like to say this because someone said, I felt bad for him. They said I think they said this in November, that they were inversing me, right? They were counter trading me, right? I hear it all the time. I'm counter trading you, puppy trades. And I'm like, you're counter trading the largest players in the options market right now, right? I didn't pull Micron out of a hat, okay? Micron was on the bar, it was on the bar chart Stroud Strangle screener, but it was in the top 200 options volume and options open interest with all these banks, right? And what happened to all the banks? They rallied too, but this was on October 15th, right? Micron, a very high liquidity right near the low, and of course what happens? They're playing a move to the upside, right? So you're never betting against me, right? Get your ego out of it. You're betting against the largest players in the options market. Right now, there's someone who's, still in a short position from the 80s on Micron just because they wanted to say gotcha to me. Well, we're getting to the 120s. Make sure you tell gotcha to your broker. I think Disney is the next kind of big rally that retail was really, bearish on a couple weeks ago. And now that's probably not going to be the case. I literally read someone say that they were selling their Disney for tax loss at this low, right? I hope it's a low, because they didn't think that Disney's management was any good, right? So I'm sure they didn't get that opinion. I'm sure the media gave them that opinion, but I think that opinion's about to change. 1, 2, 3, 4, 5. Wave 1, ABC. Wave 2. It looks like Disney is going to be yet another, stock that retail sells for a tax loss, and then, surprise, surprise, they're not going to have time to reestablish that cost basis on a blue chip. 1, 2, 3, 4, 5. Wave 1, ABC. Wave 2. right at the 50% fib. 126 is getting a little wide. I still think it holds. I still don't think Disney will fill this gap. I think the length of wave one placed it way too low. Says in a couple months, we'll be hearing about a beautiful base breakout for Disney, in the 200s when it's heading into the 260s and even beyond the 260s. So Disney looks really good. It's a great chart for the reopening sector, wave one and wave two, another wave one and another wave two that ended right around the 78.6% retracement. So I think Boeing holds 170. This company that makes all the airplanes is getting ready to fly. But this is a wave one and a wave two. We're going to go on a wave three higher to 363 before a shallow wave four and a wave five. So we're going to go on a wave three higher to 363 before a shallow wave four and a wave five higher. All in all, waves 1, 2, 3, 4, and 5, I expect will take Boeing into the 400s. I like it best for the long term, but that's kind of, when wave threes happen and they happen explosively on a stock that's a little volatile, right? They're not kind of wimpy wave threes, right? They're explosive. We're going to be watching Boeing, I think. So we're seeing oil really rip right now. And I think what's going to happen is that we're going to see the alpha chase. We're going to see all these fund managers realize if I turned in my report card, in mid-March and I didn't own industrials, I didn't own energy, I'm not going to be managing any money in the second quarter. So they're going to have to chase the alpha. I think that the industrials and the airlines are going to do very well. 1, 2, 1, 2, Elliott wave nest. Wave three of wave three won't be quiet. I think 363 is next before a shallow wave four and a wave five higher. I like Boeing best for the long term, but let's just say I wouldn't be selling calls right now. Here is Exxon Mobil. This is a really pretty chart. Man. Oh, it feels good to be an oil bull, doesn't it? Someone said no one cares about value stocks. I literally posted a video only about inflation with Jerome Powell in the thumbnail. I had to make talking about rocks a little fun. Someone said, we don't care. No one cares. And then what happens? ExxonMobil and all the oil stocks rip and grossly outperform the indices. So wave one, wave two, wave three, wave four at the 38.2% fib. And we saw, once again, ExxonMobil, surprise, surprise, 0% implied volatility, ranking percentile with XLE, right? Look at this, Occidental Petroleum, XLE. They choreograph what they're doing, right? But a lot of people, they don't want to pay attention to that, but we saw Occidental Petroleum and XLE, 0% implied volatility, or close to 0% implied volatility, ranking percentile, extremely high options market liquidity. But of course, that's when no one cares about oil. So anyway, I hope you care now. This is a wave one and a wave two. We're then a wave three higher to 75 before a shallow wave four and wave five higher. If we look at ExxonMobil, I think that it's going to this kind of wave five target zone between about 76 to 85, 84. So I think that this is a wave three in progress to 75 before a shallow wave four and a wave five higher. All in all, I think that we're going to go up into the 70s and even up into the 80s for ExxonMobil. XLE is a really pretty picture too. We'll focus on ZOM in this video. Here is Nike. Nike's a very pretty picture of the market. It's a very pretty picture of XLY. For time, we'll talk about Nike and Tesla and XLY. This is a wave one and a wave two, 1, 2, 3, 4, 5, wave three, and a wave four. So Nike's got a very pretty gauge of the market right now. This is an important validation of 144, and it's not too far away. So I love Nike above 144 as a general gauge for the market right now. I think this is a wave one and a wave two, ending between the 61.8 to 78.6% fib. I think Nike holds 144 and goes on a wave three. Wave one, wave two, wave three says Nike's at least going to go to 190. Realistically, a lot of times wave three gets to the 161.8% extension of wave one, which is about 200 before a shallow wave four and a wave five higher. I think Nike's going to the 200s. I think that'll happen in Q2 more aggressively. I can see Nike in the 190s this quarter. I think the second quarter is a little more realistic to get into the 200s before a shallow wave four and a wave five higher. Nike looks good. I think it holds 144, starts doing pretty well. Let's look at AMC theaters. I think AMC, we saw a little pop yesterday from GameStop and AMC. That's kind of how they always start, little silly pops. But what have we been talking about for a while? A rotation in the reopening, a rotation into kind of some of the stocks that we've made fun of a lot. And I think that it sounds silly, but there is risk reward right now. This is a huge wave one. We make a new high on the relative strength index, and I've honestly just kind of proven over the course of my channel why we pay attention to the bar chart strength screeners so much. This is filtering for high open interest and high liquidity and low implied volatility. So this picture is from December 22nd of 2020. Okay, look at some of these names. Home Depot, United Airlines, Boeing, Lowe's, Citibank, Gap, Home Depot again, Lowe's, right? Nvidia and Microsoft. All of these stocks exploded in 2021, okay? All of them. This is another picture from December 29th of 2020. And just look at these names, all right? McDonald's, Lowe's, Google, Carnival Cruise Lines, MPLX, Home Depot, Goldman Sachs, Tesla, Nvidia. They didn't all end the year dramatically higher, but every single one of these stocks had a very nice rally, at least at some point in 2021, higher than the levels that they appeared on the screener. Is this a magic screener? No. This is showing you where at least the smart money is paying for options right now. And yes, they could be playing the downside, but what we've seen is kind of an unprecedented kind of phenomenon recently that we didn't really see until June. We saw in June that AMC Theaters was all over the bar chart straddle and trickle screener. Now we see again, to this date, that there has been no more stock that's getting more love from the institutions, right? AMC, they are playing a huge move in AMC. I think the move is going to be to the upside, okay? I don't think it's going to 5, and I think that is a huge part of my analysis, okay? I don't just stick to Elliott Wave. I think this is a Wave 1 and an ABC Wave 2. The institutions are getting ready for a monster move in a reopening stock. And what we've kind of seen in the first week, we shouldn't be betting against reopening. Is AMC my favorite reopening stock? Not at all. Not at all, but I think it's between the 61.8 and 78.6% retracement of a Wave 1, so it could get very explosive. I think above 17, AMC's next stop is going to be to new highs. That would obviously take some time, but if it gets going, it's going to be very quick. So AMC, I think it holds above 17, and I think we're going to find out maybe towards the end of January, maybe towards the end of February, that a lot of these options that are being bought on these meme stocks is going to be a repeat of possibly what happened last January, last February, where we had meme mania. And what I always like to point out is we have kind of shown AMC was all over the bar chart straddle and strangle screener in May and in June before this explosive rally. And now it's seeing a lot of open interest. It sounds crazy. They could be playing a rally into the 70s, into the 80s. Right now, I just want to see 17 not get broken. It's not my favorite reopening stock, but I think it's really important to understand that reopening could get very explosive. Here is Netflix. Netflix is a very pretty setup. I predicted this entire advance, okay? So this is a Wave 1 and a Wave 2. I predict Wave 3, 4, and 5 higher, almost to the dollar during this range. So Wave 1, Wave 2, Wave 3, Wave 4, Wave 5. Very clearly, in my opinion, this is an impulsive structure, okay? So this is a 1, 2, 3, 4, 5 waves impulse. That means this is a corrective structure. What we're seeing right now is I was looking for a kind of wimpy Wave 4. A lot of people don't understand in Elliott Wave how a deeper correction can be a good thing. If we had stopped at the 50% retracement, if we had stopped at the 38.2% retracement, I would be calling this a Wave 4 correction. Now that we've had this deeper correction to the 61.8 and 78.6% fib, most likely for Netflix, this is a Wave 2. That means that this is all Wave 1, and it's all probably going to be replicated. The length of Wave 1 placed at the Wave 2 low says this summer, we can see Netflix go into the 750s for a minimum Wave 3 target before a shallow Wave 4 and a Wave 5 higher. In the summer of 2020, we saw Netflix, Roku, and Amazon all rally together. Also, an interesting tidbit is that Disney is a streaming stock as well. So I think Netflix could be a good sign. I think Disney could be a good sign for Roku bulls. I think that we're going to hold a little tighter would be this Wave 2 low of 504, but the true invalidation is 478. And then I'd be looking for a big rally in a streaming giant, a software giant, and that's going to be very good for a lot of stocks that we talk about. Here is Salesforce. It's a very similar idea. I think Netflix is going to the 750s. This is a very pretty chart. Wave 1, Wave 2, Wave 3, Wave 4 that ends at the 38.2% retracement. I think that what we see in Salesforce right now is that from this low, we formed a Wave 1. Now we're ending Wave 2 at the 78.6% fib, right? It's all risk reward. Okay, there's no guarantees in trading, but sometimes the market will reward bulls for taking kind of risk, right? If a bull is willing to get to risk being called wrong on the internet, the market can give them a surprisingly good reward. I think Salesforce could be an example of that. Wave 1, Wave 2, at the 78.6% fib, the length of Wave 1 placed at the Wave 2 low can take Salesforce up into the 335 range and really beyond the 335 range before a shallow Wave 4 and a Wave 5 higher. All in all, the length of Wave 1 placed at the Wave 4 low, if Wave 4 retests the Wave 1 high, can take Salesforce up into the 400s, the 420s even. So very interesting chart, very similar to Netflix, where we're looking for an explosive rally in a large cap software name. Roku, I think, is getting a lot of evidence right now, mostly from Netflix, a little bit from Disney, and a little bit from ARK 2. I think this is a 1, 2, 3, 4, 5 Wave 1 and an ABC Wave 2. We're at the 61.8% fib. We're very close to this Wave 1 high. So They are making Roku pretty difficult. I think it is going to rally with Netflix, and I think it's going to rally with Amazon too. But I think that just with Roku, 1, 2, 3, 4, 5, wave 1, now we're retesting this wave 1 high of about 176. We're actually right at 176, 178. Okay, so a lot of times this wave 1 high is a very nice support level. The 78.6% retracement is 124. Really below that, there's nothing until the 20s, right? So this is why when I take positions in growth stocks, I manage the risk up front by taking a half position size that I would for a value stock, because I know they're going to make Roku difficult. They're going to make Bitcoin difficult. They're going to make Ethereum. They're going to make every growth stock difficult. But guess what? I've been covering Roku. I've been covering PayPal. I've been covering Zoom rallies. I covered their entire rallies during 2020, okay? Now I'm ready for the next rally, and I think they're going to occur together. 1, 2, 3, 4, 5, wave 1, ABC wave 2. What we've been looking for, that we're already seeing a lot of signs of, I didn't want to bring up Beyond Meat, but what we're already seeing signs of is that stocks that we were making fun of just 2 weeks ago are already getting love, right? We were making fun of Intel, Taiwan semis, oil stocks, value stocks, and now everyone who was just all in tech, they were like, wait, what happened? The market was down. What we could see in 2022, even beyond 2022, I know we don't like to think long term, is that there is a substantial rally in streaming stocks, in growth stocks, and there is outperformance, okay? If 2020 didn't teach investors the importance of being diversified, the importance of not being all in SPY, right? And maybe taking, some of those riskier growth names when they have an opportunity, then nothing is going to. So I managed to risk up front. I'm in, a lot of e-commerce, a lot of, the software, and more importantly, the growth names. I took advantage of those dips in 2021. And if I never need exposure to any of those names ever again, then that's great. But I highly doubt that. I expect that what we're going to see is a pretty substantial rally in streaming and in growth. We're already kind of seeing the writings on the wall that we're not in 2021 anymore. This is a wave 1 and a wave 2 for PayPal, a huge wave 1 and an ABC wave 2 between the 50 to 61.8% fib. I like 169 as a stop a lot, but I like iPay a lot more. I love the iPay ETF for downside levels right now for PayPal. And a lot of people can't understand why I'm talking about ETFs so much. ETFs help to smooth out extreme data points. ETFs are extremely useful because they're not subject to kind of one stock, really throwing off the wave count. The iPay ETF holds a lot of Visa, it holds a lot of PayPal, and all three of those charts look very similar. I think this is a wave 1 and an ABC wave 2. I think we hold above 169, but more importantly, I think iPay holds above 50, and that these names will all rally together with Visa to new highs. So I talked about Visa in one of my more recent posts. I'll talk about iPay right now. But let's just make sure we kind of understand, I always like to define the downside risk, but the upside risk right now says that this is a wave 1 and a wave 2. So if at any point in the future, PayPal's above 310, most Elliott wave theorists, if they're being honest, are going to say that the equal X target is really the only expectation. The length of this rally placed this low says if PayPal is above 310, 407 would be the minimum target in the future for even if you were a bear or wave C, but more realistically, that's going to be the minimum wave 3 target before a shallow wave 4 and a wave 5 higher. So PayPal above 310 in the future could say 400 is kind of the next stop. And that's already significantly higher than the current levels. Let's talk about iPay right now. iPay gives gorgeous levels for mobile payments. Wave 1, wave 2, another wave 1, and an ABC wave 2. So this kind of sell-off looks very identical to the sell-off in Visa, very identical to the sell-off in PayPal down to the date. What we're seeing right now is that Visa is putting in a pretty swift reversal. And people are going to say, oh, Visa's credit cards, this is, but they're all in the same ETFs. Birds of a feather flock together. And if the market is trading Visa and PayPal together, which they were during this ABC correction, then Visa breaking above these highs and staging a rally could be a huge leading indicator. So Visa and iPay and PayPal, there's 6% holdings of iPay. This is a wave 1 and a wave 2. I think this is another wave 1 and an ABC correction in wave 2 at the 78.6% fib. I think that iPay will hold above 50, very important level, and go the length of wave 1, place at the wave 2 low. That can take it up to 77 for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. All in all, waves 1, 2, 3, 4, and 5 can take the iPay ETF to 96. This is an ETF that could go up 40%. So PayPal could really outperform that. And it's important to note that 1, 2, 3, 4, 5 waves getting iPay to 96 in the future would just complete this black wave 3 within the cycle from the low that was formed in October. So potentially a lot of opportunity in mobile payments. I think that the risk right now is pretty clear. iPay above 50, it's going to be worth it. I want to talk about Palantir right now. Palantir has not gone below 16, but it has broken this low of about 17-ish. So there have been a lot of readings for Palantir on the bar chart straddle and strangle screener. Usually I really focus on those kind of option screeners for stocks that have longer than a year or well over a year of options trading history. Okay, I did not pray to the bar chart straddle and strangle screener, but we know that institutions are loading up options on Palantir. So what I've really had in mind for Palantir is that this is pretty clearly a wave 1 and an ABC correction ending wave 2. We are at 16, right? So if I say that the stop level is 16 for a high beta stock like Palantir, that's kind of silly. So this is the 78.6% fib. So what I'm going to do is I'm going to compare 2 other big holdings of the IPO ETF to what I see in Palantir right now. Okay, so we're at 16. Having a stop level of 16 on a high beta growth stock that's at 16.51, it's kind of like a why bother. Again, that's why when I take positions in growth stocks, I use half the position size that I would for value, because I know they're going to get retail out of Palantir just to make them chase it a lot higher. In my opinion, that's what's going to happen. And I think that we actually have evidence that this is going to happen from 2 neighbors. So I should talk about Unity Software first, but I'm going to talk about Lucid Motors, because Lucid Motors right now is looking very interesting to what Palantir is going through at this moment. So Lucid Motors did a very similar thing to Palantir. It formed, and they're all in the IPO ETF. I know people are going to say, why is he comparing Lucid Motors to Palantir? Because they're in the IPO ETF. Okay, so if they're in the IPO ETF and IPO starts to rally, that's going to be very good for Palantir. This is a big holding of the IPO ETF is Lucid Motors. Like Palantir, we've seen the institutions are buying lots of options on Lucid Motors. This is like a wave 1 and a wave 2, very similar to Palantir. What I'm trying to show is that this is exactly what Lucid Motors just did. Okay, it got below that low. It made retail traders feel very dumb. It probably stopped out a lot of retail traders. It probably margined out a lot of retail traders. What some crypto traders would call this is a scam wick, a stop raid that just kind of clearly seems like institutional, I guess, manipulation. But what it was a stop raid, make you feel dumb about owning Lucid Motors before an explosion. And I think that Palantir could be at a very similar spot. This is kind of where Palantir is right now, I think, is this candle. Get every retail trader out, make you feel really dumb, explosion, okay? So that's why I take half position sizes for growth, because I know that they're going to do stuff like this before this. And we look at Lucid Motors and we look at Unity Software, we have evidence within the IPO ETF and from the IPO ETF itself, the correction in recent IPO stocks is near completion. I think just for Lucid Motors, 1, 2, 3, 4, 5, wave 1, wave 2, if we're above 31, is likely already in. So the 50% retracement is kind of a shallow wave 2 correction for a high beta growth stock, but the institutions are really buying a lot of options on Lucid Motors. They're probably playing a move to the upside right now. And what we could see with Unity Software and Lucid Motors within the IPO ETF is that the length of wave 1 placed at the wave 2 low gets replicated, and that Lucid Motors and Unity Software are going to go on another leg higher. I think right now we'll see 31 not get broken, and Lucid Motors could be heading to new highs. Now, Lucid Motors is up a lot, right? I don't want it to seem like I'm just talking about Lucid because it's up. I'm talking about Lucid, I'm talking about Unity Software because they're huge charts for the IPO ETF. That makes them huge charts for Palantir bulls. Wave 1, ABC. Wave 2 for Unity Software. This has a very close analog. This is what I was looking for Palantir, was the Unity Software treatment. It ended up getting the Lucid Motors treatment. So Unity Software did not break the May low. Lucid Motors did. This is a wave 1 and a wave 2, wave 3, wave 4, wave 5. I believe this is all a wave 1 breaking out of the IPO high, right? So what Unity Software just did, it confirmed an IPO base breakout. A lot of retail traders will say, yay, Lucid Motors is up 100%. A classical trader will say, whoa, Lucid Motors and Unity Software they just confirmed an IPO base breakout. They just confirmed that all of this was accumulation on a stock that's very young in its life cycle. And I think what Unity Software and Lucid Motors are doing is they are acting as leading indicators that other IPO stocks like Palantir, like Xpeng, like Lee, they're going to go break this IPO high, okay? So Unity Software gives nice levels for Palantir bulls. I think this is a wave 1 and a wave 2. So if Unity Software is above 104, I think it will end wave 2 and go on another leg higher. So Unity Software and Lucid Motors both likely are going to take another leg higher. And if that happens, then very likely the IPO ETF itself with Palantir is going to do very well. I think this is a wave 1 and a wave 2. Unity Software could go on another wave 3 to new highs significantly higher. And I think that during this time, we would see that Palantir really starts to play catch up. I want to see 104 not get broken. So that's an important level for Palantir bulls. But the most important level is IPO. Okay, so since Palantir is right next to 16, it's about 50 cents away from 16. I think the best kind of downside risk management level right now for Palantir comes from the IPO ETF, which holds Lucid Motors, it holds Unity Software, it holds Xpeng, it holds Lee, and it holds Palantir. And what we're seeing one by one from each of those names is that the IPO high gets broken and a long-term base breakout gets confirmed. So the IPO ETF, wave 1, wave 2, huge wave 3. I believe this is an ABC correction ending a wave 4 between the 38.2 to 50% retracement. This is where a wave 4 can end. The IPO ETF can turn around, and this will be the prettiest chart. Just like ARK, just like PSJ, IPO can go break this wave 3 high and look beautiful in the future, okay? But it doesn't look beautiful now. But if IPO turns around, the classical traders will fall in love with this. And there's a good reason, okay? So let's just talk about what would happen if IPO holds the 61.8% retracement of 42 and it has a wave 4 reaction between the 38.2 and 50% fib. Then my expectation is that this ETF full of recently IPO'd stocks will go the length of wave 3, placed at the wave 4 low. That would take it from 51 to over 100. That means that an ETF full of IPO stocks could double, okay? So if we're above the 61.8% retracement, we can see why they're making a lot of these IPO names difficult. If we're above 42, I believe we'll end wave 4 and go substantially higher. If at any point in the future the IPO ETF is above 77, then that's going to be a huge base breakout. It will confirm that all of this is a year of accumulation, and I think it is. So above 42, IPO is heading to new highs. Let's talk about Tesla, NIO, and Xpeng. Tesla forms a wave 1 and a wave 2, a huge wave 3, and a wave 4 that ended at the 38.2% fib. This is another wave 1, another wave 2. Just like Marathon Patent Group, just like so many names, this monster move in Tesla was forecasted by high liquidity, high open interest, and high volume mixed with 0% implied volatility. What that normally means is that institutions are taking advantage of cheap hedges and they're playing a massive move. Yes, sometimes and a lot of times that move is to the downside. But when it isn't, it looks like this, okay? This is a wave 1 and a wave 2, a huge wave 3. Tesla is giving extremely important levels for market bulls right now and for clean energy bulls. If it's above 886, wave 4 has ended. The length of wave 3 placed with wave 4 low says Tesla's next stop is 1,590. I think that's going to happen in the second quarter very conservatively this summer. I still believe Tesla will hit 1368, but right now the bigger idea is that this is a 1, 2, 3, 4 wave 5 in progress. And what Tesla's close to doing, what's kind of written in the sand right now, is that Tesla's going to go past 1368. And when Tesla does, it's most likely going to confirm this is not a wave 3 and a wave 4, it's another wave 1 and another wave 2. What's that kind of imply? That implies that Cathie Wood and some of her price targets for Tesla are going to be very close to being hit, okay? So that's not really important right now. What's important right now is that this is a wave 1 and a wave 2. This is a huge wave 3. If Tesla's above 886, wave 4 is already in. The length of wave 3 placed at the wave 4 low says Tesla is going on a wave 5 higher, or it's within a wave 5 higher to 1,590. It will pass my first quarter target of 1368. So looking good for Tesla, looking good for NIO. NIO is very similar to Palantir, where it's a pretty great opportunity being made very difficult. It is at the 61 or very near the 61.8% retracement. I think that this level has to be respected, but I think there's a lot of evidence in other levels from other EV names like Tesla that are more important in validation levels. So if at any point in the future NIO breaks this downtrend line, a lot of elite wave theorists will use that as evidence that a corrective structure has ended. I believe it will. I believe it'll hold 26 and go higher. So like Pounder, we are very close to 26. So we need to look for other levels from similar EV names and more importantly, ETFs that hold NIO for invalidation levels. I think right now if NIO is above 26, it's going to go break this downtrend line and get very explosive. Okay. We just talked about Tesla going to, the 1590s. So I think Tesla holding 886 is the first huge level, but I'm going to talk about QCLN. I know that I talk about clean energy ETFs. This is the last one, I promise, but this has a lot of importance because it holds a ton of NIO. This ETF really holds more NIO than a lot of other ETFs. I'm pretty sure this ETF holds the most amount of NIO. It's got a big holding of NIO, Tesla, and Enphase Energy. And Tesla and Enphase Energy, they're already above the first quarter high from 2021. They're explosively, or have had an explosive move above that high already. So the three biggest holdings of this ETF, at least the last time I checked, in order are about NIO, Tesla, and Enphase Energy, between 6 to 9% for those names. This is a wave 1 and a wave 2 for QCLN, and I think that this is a wave 3 in progress. So the reason that I'm bringing up this chart is because NIO is close to 26. So a nice level right now for NIO bulls is QCLN, which holds a bunch of NIO, Tesla, and Enphase Energy, holding above 53. If it does, then this is a wave 1 and a wave 2. The next minimum wave 3 target in the future is 101 before a shallow wave 4 and a wave 5 higher. NIO would likely be doing very well during that time. And that really lines up with Tesla going to 1590. It lines up with a very explosive wave count for Enphase Energy as well that I go over frequently. So if QCLN is above 53, then the length of wave, the 161.8% extension of wave 1 says it's going to go up to 101 before a shallow wave 4 and a wave 5 higher. So I use ETFs and I use correlations to really find risk management levels when the market isn't giving them. Okay, so right now, since NIO is close to 26, if QCLN is above 53, I think this is a wave 1 and a wave 2. The next wave 3 target is 101. Almost just as important, probably just as important, would be Tesla holding that wave 4 low. So anyway, wanted to talk about that. Wanted to talk about XPEV. XPEV, I think, is a 5% holding of QCLN, but it's a big Chinese EV name. And I think that this is a wave 1 and an ABC wave 2. This is another wave 1 and another wave 2 for XPEV. And what we just talked about in the IPO ETF, that the IPO stocks could do very well. Li Auto actually was leading the EV market in China today. But anyway, this is a wave 1 and a wave 2. So I think that 33 is a great level for kind of the medium term for Chinese EV. If XPEV is above this level, then this is clearly a wave 1 and a wave 2, and a massive wave 3 is in progress. That would then mean that this is wave 1 of wave 3, wave 2 of wave 3, and wave 3 of wave 3 can get XPEV to 70 before a shallow wave 4 and a wave 5 higher. But what's more important than that is that likely around this time, we'd have Lucid Motors, we'd have Unity Software, we'd have XPEV, and we'd have Li Auto confirming IPO-based breakouts. And while it would be great to see that XPEV is up, about 300, 400% from when I've talked about it, the bigger deal is that XPEV would be confirming an IPO-based breakout. It would be confirming a year or over a year of institutional accumulation out of an IPO base. So all recent IPO stocks by nature have higher risk and higher rewards. And XPEV is a great example of that. If it's above 33, with 38 being very tight for a high beta growth stock, it's going to go to 70 before a shallow wave 4 and a wave 5 higher. Great downside levels for NIO bulls, great levels in general for XPEV. Let's talk about Bitcoin right now. Bitcoin, I'll say right now that Ethereum gives very nice downside levels and Marathon Patent Group gives very nice downside levels. For Bitcoin, I think this is an ABC correction and a wave 1 and a wave 2. This is another wave 1 and an ABC wave 2. We are getting very close to, remember, I trade bar chart. I know that for Bitcoin and crypto especially, we have kind of different exchanges giving different numbers. So I will be using the bar chart daily candles for Bitcoin. I have that this low is 39,716. Okay, we have not broken that yet. But with Bitcoin, that's about kind of spitting distance with a high beta stock like that. So I think that Ethereum is an extremely important chart, and so is Marathon Patent Group. But just for Bitcoin, until this low goes, I think this is a wave 1 and a wave 2, and we could have an explosive wave 3. The minimum wave 3 target would not be 70,000. If Bitcoin goes on a wave 3 higher, it's going to go way past 70,000. It's going to go to the 161.8% extension of wave 1 before a shallow wave 4 and a wave 5 higher. But even if wave 3 did end at 70,000, the classic wave 4 is just a retest of the wave 1 high before a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is at least the length of wave 1 placed with the wave 4 low, Bitcoin could be getting ready to go to 96, 97,000, okay? And what we could be seeing is that we've gotten a lot of evidence already, a week into 2022, that betting against inflation plays is a bad idea, right? So what do they want a lot of retail traders to do right now? Bet against a huge inflation play. And I know that, whenever Bitcoin goes down, they say, oh, it's not an inflation play, but then they remember it is when it explodes. So anyway, I think this is a wave 1 and a wave 2. I think we're going to go the length of wave 1 placed with wave 2 low minimum. We're going to get into the 70K range before a shallow wave 4 and a wave 5 higher. I think Bitcoin's path to 96,000 is right in front of us, but 39.7K is too tight. If Bitcoin did go below 39,000, then what I would do is I would measure the Fibonacci retracements of the entire rally from June to November, and the 61.8 to 78.6% retracement is where I would look for a wave 2 to end. That's not too far away from 39K anyway. That's about 37.5K. But more importantly, I'm going to be looking at Ethereum, and I'm going to be looking at Marathon Patent Group. You can do whatever you want. I'll be looking at Ethereum and Marathon Patent Group. 1, 2, 3, 4, 5, wave 1, ABC wave 2, wave 1, ABC wave 2 for Ethereum. Okay, Ethereum and Bitcoin, they're going to move together. Okay, I'm not getting carried away with that correlation. This is a wave 1 and a wave 2. So if Ethereum is above 2,657, I believe that this is another wave 1 and another wave 2. The length of wave 1 placed with wave 2 low says the next minimum target is 5.3K before a shallow wave 4 that retests the wave 1 high and a wave 5 higher. Realistically, wave 3 would go way past 5.3K. Wave 3 would go to the 161.8% extension of wave 1. What I'm trying to show, though, is that if this is a wave 1 and a wave 2, even in the most conservative expectation, wave 3, 4, and 5 can take Ethereum to about 7.1K. And in this scenario, if Ethereum does not go below 2,657, that would just end this red wave 3 at 7K. So that means that 7K in the future could end up being a local top. Okay, so we can see with an opportunity like that, right, we can see why they're getting everyone out. The last time that Ethereum had a fever pitch rally, it went up after the kid at the bus stop had bought it because of inflation. Okay, the kid at the bus stop made money on the last Ethereum Bitcoin rally. And I think that could be the case again, where Ethereum's up at 7K and we're like, who in the world is buying Ethereum? And then it goes even higher. Because in this count, this is a wave 1 and a wave 2. Wave 3, 4, and 5 says that 7.1K would just end this red wave 3. So I want to see Ethereum above 2,657. Very important level. More important than anything on Bitcoin, Marathon Patent Group. I'll also include very similar idea, wave 1, ABC wave 2. I've literally already predicted Bitcoin and Ethereum and Ripple to go up, 300, 400, 500%. I've predicted Marathon Patent Group to go up 300%. But anyway, let's try this again. I think this is another wave 1 and an ABC wave 2. I guess I'm a Marathon Patent Group shill, but I don't think so. I think this is another wave 1 and another wave 2. The institutions are loading the boats on Marathon Patent Group options. Yes, maybe they're playing a move to 5, but the last time they were playing a move to 83. Okay, I don't think that it's going to stop at 83 this time. I think this is a wave 1 and a wave 2. The best invalidation level for crypto is Marathon Patent Group holding above 18. If it does, this is wave 1 and this is wave 2. And they're buying options heavily on Marathon Patent Group right now because wave 3 at minimum is going to go to 90 before a shallow wave 4 and a wave 5 higher.